Good afternoon, all. CamelbackTrading.org coming to you this Thursday afternoon, January 28th. We are looking at the SPY ETF's market profile here on Window Trader. And a very disappointing close for the bulls. I'm going to go over IWM and triple Qs first. A lot went on here, and it's going to be another fun day tomorrow with these reference points. But let's start here. So what did IWM and the Russell do today? Well, pretty much kind of a B shape. Open in balance, in value. Their value ended overlapping to lower. They did end 9 wide. They have a nice afternoon rally high in K. And more importantly than any of that, it's an inside day. So tomorrow, IWM, very important. If you come out of the inside day to the upside, well then we're firmly back inside a 10-day balance, and they can start making their move possibly to the upper end of that. However, if they come out of the inside day to the downside, well, then all we did yesterday was take it out, come back in, and then fail and come back below. Look at this, a 10-day balance. Now, why is that important? Well, you can rest assured, even though the market flushed hard yesterday, especially in IWM, it took everything back and the gap. But let's keep things in perspective. This market's still long in IWM for 10 days overall. Okay? So if you get any acceptance now below yesterday's low, which is now the bottom of this 10-day balance, well, whoever's still long in here is probably going to flee the scene. And if that happens, you can get a pretty good flush and get shorts to pile on. So that's very important if we take out today's low and come out of an inside day, which would give even more fuel to the fire, coming out of an inside day to the downside. You go with it, which means to short it, and monitor it for continuation or lack of. Very important. Triple Qs. They didn't have an inside day, but I'm going to kind of treat it as one because they barely took out yesterday's high. And to be quite honest with you, the fact that they took out yesterday's high and didn't fill the gap from yesterday, which wasn't that large, kind of surprised me. But it didn't. So I'm going to kind of treat it again like an inside day. So what does that mean? Same thing. If we take out today's high tomorrow, I would go with a long because then the odds of filling the gap are very good, and then you have a very prominent POC from the 26th. If, however, they close very poorly also, just like we did, if, however, they come out of it to the downside, now look, and that's end period. So again, they're basically in balance. You want to call it a 7-day balance, 2-day balance, whatever you want to call it, but it's balanced. So if you come out of today's low to the downside, I would go with it with a short and see what happens at M's low from the 27th. If you can't take that out, well, then I would take the short off and you'll see if you're going to stay in balance. However, if you take yesterday's low out after that, well, guess what? They never filled the gap from the 19th. Well, rest assured, if you take out the 27th low, you're going to get that gap, and now you're firmly back into another 7-day balance. So there's a lot of important things going on here in all the indices. I hope this helps. And then in the SPY, well, same thing. This was all shorts yesterday afternoon, KL and M. Well, they got taken to the woodshed today. We opened, drove straight up, and never looked back really. We had a slight pullback in E, slight pullback in H, and then finally got the cleansing that I was looking for in J. And look what it did. You shook out all the weak longs, and then guess what? The shorts piled in again, just like yesterday. So let me go over my day and then what we're looking for tomorrow. So I took a short in A period against the afternoon rally high from yesterday. This is all tomorrow's expiration, 379 put, and I got paid pretty nicely on it. Then in B, I took a short against yesterday's high, and same thing, got paid nicely for it. So I started off the day, believe it or not, with 2 shorts, but I did well in it. Then I started doing some things which kind of cost me and started chipping away at my day. C period, I took a long thinking we would hold. I didn't take it early, believe me. I didn't care if single prints filled or not, but I thought maybe we would hold A's high. It didn't happen. 381 calls, took them off for a small loss. It did go back up, and we were still one-time framing up, but I wasn't going to sit there and then see what would happen if C continued down. So once C really got acceptance below A's high, that's where I took them off. Okay. Then in D, you know what? Was that C? Yes, that was C. Then in D, again, I took a long, thinking we took out yesterday's high. We got into the gap. I didn't take it at the high. I took it around here. But once again, E came down, stopped the one-time framing, got out of it. So believe it or not, I lost on two small call plays on the 381s and the 379s. E period. I then took a short versus no single prints and the one-time framing down. Well, guess what? We didn't get anything below it. So after I got out of the long, took the short, it went against me. So I had 3 trades in a row that I struggled on and lost. Now I gave back basically what I was up in A and B. Because believe it or not, even though they were small plays, when those algos go against you, I'm in 5-tick increment. I'm in 8-tick increments here. So price doesn't look that far away. But when they go against you, they go against you. So I gave back everything I made in A and B. I was absolutely dead flat on my P&L. Finally got my act together in the afternoon. But not as much as I should have, especially in J period. I took a short in F. I was like, okay, we're getting now to the previous 8-day balance high. We're into the gap. I don't know how much higher we're going to go. It went up. I made money on them before G went back up. Those were the 382s. Did the same thing in H. When H took out G's low. Took a short. It worked out nicely, but we still didn't get the flush I wanted. The trade I should have made good money on was J. Never took out I's high. As soon as it took out I's low, I was still looking for that flush, and I watched it. I did take a small, believe it or not, I took a small long against A's high, which worked out. I didn't stay married to it. 379 call. It worked out. The puts I took in H were 382.50s, which worked out. So I did well in the afternoon. I made money on the short here, made money on the long here. Believe it or not, so I made money on 2 shorts in the afternoon, F and H. I made money on the long, and then I didn't do anything to M. And believe it or not, I scalped longs in M a bunch of times, and believe it or not, I made money on them. I didn't stay long with them. It was the 378 calls. So I ended up having a good afternoon and green on the day. Didn't take back what I lost yesterday, but it was still good. But I'm happy that I thought I saw the market well. I actually bet somebody in my room that D was our high for the day when we were in E period. Now, was I wrong? Yes. But was I really wrong? We did take out D's high. Don't get me wrong. I was wrong. And we did get $1 higher. But what I'm saying is, was I really wrong? What happened in J, K, L, and M was what I was looking for in F. In other words, I thought E, maybe F and G might get up to around D's high but not take it out and then roll over like these did. So technically, yes, I was obviously wrong. It went up $1 higher. But as far as seeing the market, I still saw it correctly because it happened later, but what happened in J, K, L, and M, I thought was going to happen in E, F, and G. So I'm not unhappy how I call the market. All right. Destinations for tomorrow. Wait until you see these babies. First upside, we closed at, where did they have us closing? 377.63. My first upside destination is today's high, 381.93. $4 higher. $4 higher. We have a 6Y POC. That's nothing to me. So my first destination on the upside, I mean, obviously M's play is going to be, M will come into play big time if we trade inside of it. But the first technical definition is the 381.93 high today, then the gap. 381.94 today, the gap, and then filling the gap at 383.54. It was 322-point gap coming into today. It's 160 points. They cut it in half almost exactly. Almost exactly. Downside, just as scary. We closed at, I forgot already, 377.63. Downside, today's low, 375.89. It's only a buck and change. Then we don't have anything to yesterday's low, 372.01. And then we have all those other destinations I gave you yesterday, including the 50-day moving average. What were some telltale signs this market wasn't going to close the gap? Well, there was a fellow in my room today, and I'm telling you why this room is so valuable. And by the way, Sunday is the last day you're going to get into this room for 20 bucks. So I have we have a bunch of former floor traders in here. And they're excellent. And this fellow, who I didn't know, he didn't trade on the floor I traded on, he called today's move up from B period. And he called it excellent. I mean, he was right. But I also told him, if we're going to keep getting what you said we're going to get, I think we need single print and single prints to hold. Well, SPY had a chance for 4 sets of single prints today, ES3, and not one of them held. So when that happened, I told him he had a great day today. He did excellent. But I told him, because we're not holding these trend days, these buyers are going to get nervous if we start really taking out a previous time frame's low. Now, they didn't get nervous in E, and they didn't get nervous in H. But they sure as hell got nervous in J. And look at the result of it, as they all flushed out and the shorts piled on. So that was a little nuance that all this was weak longs. And that's what happened. Okay. Let's go to the charts. 1 day to go in a month. So this is what you have to look for. Last month's high, we got below it yesterday, but we got way above it today. Well, it's still $3 above it, but the way this market's moving, who knows? Right now, the monthly's healthy, very healthy, one-time framing up 3 months. Weekly. Tomorrow's going to be somebody asked me, well, what do I think going for next week's outlook in SPY? I said, I'm not going to tell you till tomorrow. I said, because there's a lot of things on the table. We could have an outside week down if we close below 376.75. We're only $1 above that. If that's the case, that's bearish. And today what we did means nothing. And I would still look for the bottom of the 4-week balance, which is 364.82 eventually. If we close inside of the last week's range, well, then it's just pure balance. If we rally again and get above last week's high, well, which would mean closing the gap, by the way, then it would be very bullish. I'm not looking for that the way we sold off today. So again, everything's still up for grabs. And then in the daily, pure as day, a 2-day balance. Look at this pullback. This is not very positive. Yes, it was very positive. Look, we were down $10 yesterday. We were up $7 today and closed up $3. So for goodness sake, they're talking about GME and BB and Bed Bath & Beyond. They're moving the S&P 500 like a penny stock. So for all intents and purposes, this is a 2-day balance, plain and simple. If we come out of today's low to the downside, we're probably going to go test yesterday's low and then look out below. If we come out of it to the upside, like I said, the gap will fill and then we'll be firmly entrenched in this balance again. Remains to be seen. Hope you had a good day trading. Have a great night, and we'll speak prior to the opening tomorrow.